Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at Wellshield, an outsourced CIO and investment research company, and Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company. All right, fellas, OpenAI announced this past week that they have 200 million weekly active users. They also highlighted they have 1 million paid corporate users, right? So they had 100 million users in November of 2023, right? So that's like more than double in less than a year. And then they had 600,000 corporate users in April. So what is that? That's like 6 months, right? They went from 600,000 to 1 million. So growing, right? They also, so look, this company, they're forecasting, this is in the press, right? Not my numbers, but they're saying $5 billion of 2024 revenue, right? The recent round's at 100 billion is the round. Now there's some discussion that maybe that jumps up to like 125, 130, we'll see. So, but at 100 billion valuation and a $5 billion in kind of like 2024 revenue, that's 20x revenue multiple, right? So maybe question for you guys, like maybe Clint will kick it off with you, man. Like, what do you think is 20x? And I guess you probably call this future forecasted revenue, right? For 2024. Is that fair valuation? Would you pay more than that? A 20x revenue multiple? Like, what do you think?
I think it's, I think that's a high number. But ultimately, these things are not necessarily something that you can really grab a hold of a valuation and try to buy cheap. You've got a major trend, and that trend, those business models, everything is still evolving. We have no idea what the revenue potential of this company is. And I think that gap it's very similar to SpaceX, right? And Starlink, that gap of not having a business model out there where you can, kind of articulate a great valuation for it, kind of leaves the space to pay up. And people are paying up. And I think it's really just about supply and demand at this point and speed with which they're, navigating this market. They have a very developed model. It's interesting that they published this last week after, I think I sent it to you, but Goldman had said that their daily website visits were down substantially, had fallen off a cliff. Now, my question was, did that come from the app? Because I find myself using the app more than I use. Like, I use Anthropic on the site, but I use ChatGPT app now primarily. For everything.
There was also, not to interrupt you, man, but there was also some buzz after that announcement came up that they changed the URL. It went from like ChatGPT.OpenAI.com to just ChatGPT.com, right? So like maybe the Goldman analyst didn't pay. I don't know. But listen, let me ask you a question on the valuation. So NVIDIA, Microsoft, Apple are rumored to come into this new round at the 100 billion valuation. Does that give you more comfort around the quality of that valuation, or you kind of still feel the same way?
I think the valuation is a mystery, right? We could say 20x revenue all day because we don't know what their revenue capacity is. The market's never wrong, in my opinion. So the market is telling you, demand is telling you that they have substantially higher revenue potential than what is currently being earned or what is even projected to be being earned next year. And I think that's ultimately why there's probably room to run on it. If you've got these big players coming in, that's a substantial trend. It's a trend I want to ride. Look, I couldn't justify the valuation in the first round. It's going to go up from there. So
yeah, this is go for sure. So Nick, like this is more activity in the secondary market, right? But the company keeps like offering new solutions. Models keep getting better. It is interesting. What are your thoughts on just the product lineup? They're starting to go into search. I think they're getting more business customers now. Obviously, that's got to be a big moneymaker, right? But I mean, you're obviously a technologist, right? And a data guy. Like, what do you think of the product? Yeah, right. The product mix for OpenAI. Do you like it? Do you think there's other opportunities they could pursue, or is it just more about like penetrating the market and getting folks to start using their stuff?
Sure. I'll hit the last point first. I think penetrating the market, they're doing an exceptional job. So you can see that double that they had from last year, and then an almost double on the corporate customers in just a short few months. I think that starts to hit on what you posed to Clint. I mean, is this a fair company at a great valuation? Maybe not. It's a great company at a fair valuation, right? And that's why we have these exceptional investors and partners coming in and wanting a piece. You're probably not going to want to miss out on this one. And if you did, you're just going to kick yourself if you're Microsoft, Nvidia, or whomever it might be, Apple, right? So, but it is interesting that you are paying for explosive growth a year back as well. So going back the full to November 2023, it's actually down 13%, and maybe it wouldn't have been a 20 multiple; it would have been like a 35 or a 40.
Right.
So that's really, really interesting. But as they expand their product line, I think it's becoming more pervasive, because anyone that was online on November 2023 could have said, "Oh yeah, but it doesn't do this." Well, guess what? Now it teaches you math.
Right.
Guess what? It doesn't show me how it arrived there. I was actually doing a QSBS workout this morning, and it said, "Do you want to see the calculation?" I'm like, "Yes, I do." Click the button,
Yeah.
and the fact that your user interaction, whether you're a person or a corporate, is now profoundly different in just 10 months. I mean, that's phenomenal. So I think they are making it very, very difficult for the other models to come in and the apps to compete with them. And I kind of think the Goldman analysis of, oh, there are fewer hits on the website. You know what? Who cares? Because you want to look at the active users, who's really pounding away at it, and then who are the corporate users that are stumping up cash.
Right.
That's the important part. Are people paying for it? And clearly, yes, they are. I think that also the rising tide lifts all ships. So you're going to see this with Anthropic. You'll see this with X and Grok and everyone else in the space as well that are complementary.
Right.
But yeah, it's definitely getting used holistically as a technology.
Yeah. I mean,
How does this
go ahead.
compare to the other competitors? Like, how many daily active users and what's the growth rate been for Anthropic? I would rather look at it as like number of users growth, not percentage. Same thing for Llama, Grok. Do you guys know, or I haven't dug into it, but I don't know if you guys know that off the top.
I'm not sure. Nick, have you seen anything?
Not to hand. I think we throw that one in the comments if we can grab it, but I'm sure we can get some stats on those.
Yeah, I think that's a meaningful follow-up, just to say, like, okay, comparatively speaking, where are the other LLMs from a growth perspective?
Right.
And then we could dig into the valuation.
Well, I can tell you that the revenue generated by the other platforms has been substantially lower, right? For those that have kind of paid revenue models, right? So OpenAI is like leaps and bounds ahead. Some of them, like, Google Gemini is free, right? Which I'm going to get in. I'm kind of hit on some of the stuff in the future, but yeah. So there's like different business models too, right, Clint? It's kind of interesting. I mean, on the enterprise side, it's all pretty consistent, I think, but on like the direct to consumer side, there's some different business models floating around out there.
Yeah.
And what's the value of the direct to consumer? Just the more questions, the more data. It's really a data play, and that's why you have Llama and Gemini, who have like dominant positioning in data, in my opinion, being able to capture that and continue to develop.
Yeah, I mean, okay. So how about that? Let's jump to that, right? Because that was kind of one of the topics I wanted to hit on. So it's like a perfect transition. So thanks, Clint. Right. So this is what I got. I got Gemini so that's Google, right? Is free for direct to consumer. If you want to go through their enterprise, and this is the number that they're quoting me, I use Google, right, for email and everything else. That's $33 a month, right? XAI, which comes through, that's Grok, right? Comes through X, that's $8 per month. They don't do any enterprise business. As far as I understand, there's no API yet for XAI there because they're, I suppose, newer, right? So there's that. OpenAI is free. They're $20 per month for kind of their premium models and their enterprise dollars. I think it's similar to, I should have looked that up and had that number, but I want to say it's similar to Gemini. It's like $30 a month, right? Anthropic is free and their pro model is $20 a month. And they have a Teams too, which is similar to the Gemini. So that's kind of where people seem to be focusing in. Maybe one thing that's interesting, and this might be compelling to what, because, OpenAI and Apple have that deal on Siri, right? So to be determined if they're going to like upcharge people to use OpenAI through Apple. But Amazon is releasing Alexa, right? That's the little
Right.
speaker.
Hockey puck.
I think most folks know what those are. Yeah. So Alexa, and they're going to use Anthropic. What I thought was interesting is they were going to use their own proprietary models and like they weren't good enough. So now they're using Anthropic. That's going to be $5 to $10 incremental fee. So you can like continue to use Alexa as is, or you can kind of pay up to use the AI version of that. And that's going to be $5 to $10 per month. So it kind of begs
how much better is it? That's the question. Like,
I mean, for them not to use their own models to go to the
it's
Anthropic,
gotta be significant.
I would think it has to be material. Yeah. Right. Go ahead, Clint.
For our purposes, we're finding Anthropic a lot of the time is also beating out the OpenAI models. So it's incredibly
And what
impressive.
metric, Nick? What metric? Like quality of response or
accuracy? Yeah. Yeah. Because
interesting.
We're trying to do repetitive tasks and things of that nature at scale, right? So for certain aspects, but it's able to comprehend the language, right, and interpret it back to us in a more clear fashion, or just the numbers are right, more often than the others. So super interesting that Amazon maybe came to that same conclusion, or it's just more comfortable starting that way. But yeah, I'm kind of curious when you said they before. The thought is are these the analysts? Is this the market in general pricing it out? Because in my mind, I'm more interested in how those corporate models, the enterprise models, are increasing the revenue rather than the consumer.
Agreed.
Because everybody can have really different attacks on the consumer. Invariably doing it free, you're getting more information sometimes, or you're able to get more marketing output depending on how you want to come back.
Right.
I really liked Clint's question of, I don't care as much about percent, I care about number.
Yeah.
Because in my world, I think about everything in percent terms.
Yes.
But in this case, I think he's right. Like, okay, they gained 400 million enterprise users. What did Anthropic do?
Yeah, right.
What did X do? Yeah.
Yeah, I mean that's like the business side of this, I think, is where in 5 years' time, if you look at the revenue mix, right, from kind of like consumer enterprise versus direct to consumer, or I would say consumer or business or direct to consumer, I would have to think it's like 60-70% is enterprise or business, right, relative to direct to consumer. And so that's the position you want to be in. But can we all agree? Like, I don't think most businesses have, I think they're still in the process of like assessing what, let me say this. I think most businesses now realize they have to do something with AI within their organization. Can we agree on that? And then once you have that, then it's like, well, what are we going to do? And I think a lot of folks are kind of finalizing their plans on like what exactly they're going to do or how they're going to start implementing, right? And now the implementation is going to come, in the next couple quarters here.
But what do you do for anything? You test them, right? So you put them side by side. You go out, you test drive cars, you go out and test drive data, you go out and test drive LLMs now.
Yeah.
So maybe we also have to wait another 6 months to a year to see who's been the most sticky.
I mean, there's a lot.
Everybody's going up and to the right, but how much attrition are we getting? Because those are numbers that we just won't see very quickly.
No, that's a good point. I mean, but it's interesting too, man. Like some of the examples that OpenAI has highlighted, or that like Klarna as an example, Morgan Stanley, and some of these other, it's almost like OpenAI is going in there and doing like a consulting agreement.
That's how the Klarna example looked for sure. Absolutely.
Right?
Yeah.
So it's more than just like providing the technology. It's like almost, it's so early, and then of course you got all these big consulting companies and they're doing the same thing, right? You know what I'm saying, Nick? The Accentures of the world and whatnot. So
well, that's your sales. That's just your sales process. When you're an early company, your sales process it has to be consultative so that you can get people to use get the most out of it, right? You're trying to be useful. I think ultimately, and I think about this a lot, I still believe that the power of these models is in the data, period. So that's why there's always going to be free options, because they have to continue to trade or train the models. They have to gather as much as possible. And getting that free is great because the product is us, the individuals using it. On the business side, I see the revenue really going to a different model where it's going to be use case agents that are applicable to that business itself. So as this moves to agents, think about it. If I have a payroll agent that's well developed, I'll be able to deploy that in so many small businesses. If I have a legal agent or a contract agent or contract review agent or whatever it is, right? These things are going to be able to be deployed at premiums. That's where I think the ultimate revenue model really starts to manifest, because then it becomes a very easy and cheap option. I look at my huge legal bills that I've spent over the last year. Anything they offer me is going to be attractive if they can save me on those legal bills, because very small percentage of those legal bills were actual consultation where I needed to think through a problem. They were mostly contract reviews, contract drafts, redlining, going back and forth with another attorney on a particular agreement. All of that will be an agent. Same thing with accounting, right? And tax compliance, even compliance if you're running a wealth management firm. So that's the way I kind of see the business to business model shifting, is agents and applications for businesses.
So I agree with that. And you guys have heard me kind of talk about like my breakdown on the AI ecosystem is you have these like applications or agents will be one kind of sub asset class. You'll have like the platforms, that's the OpenAI, Anthropics, Geminis, et cetera. And then the picks and shovels, which are like the cloud providers, the chip providers, et cetera. Right. Yeah. Right. So data. Right. But let me ask, like those enterprises, do you think that the very large companies, so like top 100, top 200 of the S&P 500, they're going to want some customization, right? Versus using like the off the shelf agent, right?
Well, that's just think about all the expensive overhead that's not management.
Yeah.
Right. And then you start to develop customized models trained on your use case in your organization.
Carnage.
Wow. All right.
Well, it's wonderful for profits, right?
Yes.
Wonderful for profitability. But here comes universal basic income. We should all.
Right.
Actually, I'm going to go back to trade school and become a plumber.
Man.
So I want to throw a plumbing wrench at this, right? And this could happen. So our office is right outside 30 Rock. We had the picketers out front when there was that big strike for Hollywood about the use of AI and many things, right?
Right.
But one thing that came through, and this came up in a discussion with a fellow CEO in our space, he said, in those contract negotiations, they ultimately got that AI shouldn't be used to write scripts. Okay. What if the same thing happens with lawyers and they want to be coveting their billable hours, right? And they agree, okay, we're not going to allow this. Our firm, our practice isn't going to allow this. What happens then? Then you have
the work around it. You have general counsel that you pay a big check to. They're the attorney, because the only way you're going to get by that is like rules at the state level or federal level to have an attorney who's passed the bar.
Who are the best lobbyists, though? The best lobbyists are going to be lawyers.
And the best politicians. They're writing all the laws. That's right.
Exactly right. So maybe that throws a wrench in the whole idea. But naturally, you have a cheat mechanism where maybe within the law practices, they're going to use it anyway. Don't tell anybody. Still bill you the normal number of hours. Their profit goes through the roof. And because they're private enterprises exclusively held by the internal partners and actually don't have like external shareholders, I mean, this just gets worse.
Oh, for sure.
They do all right, but
it slows it down.
There's going to be
right. I mean,
there's going to be
this is going to get weird.
There's going to be a lot of creative destruction here, right?
Well, think about also like the
massive
copyright thing. We saw that come out recently too. It's very similar to the attorney thing. So Aaron, sorry to cut you off, but it just had me thinking, because they were coming out saying, well, AI really doesn't work. And they admitted in cryptic terms that their model doesn't work without being able to train and gather information from copyrighted sources. So imagine when that that's going to be an opening for a lot of people to provide deterrence to the advancement of AI. But ultimately, I think my belief is whatever is going to benefit the most people is going to rise to the top. And so
Correct.
it's going to be hard to
Well,
slow it indefinitely.
but Clint, I mean, let's be fair. If you're a publicly traded company and you have competitors that are implementing AI at scale and driving huge bottom line benefit, right? Whether it's growing revenue or reducing expense because you're eliminating people's jobs with AI now. Like, how as your CEO are you not saying like we got to do that too? Like, I just think that I think it's just starting with enterprise, with businesses. We're just starting, and some of the people that are early adopters are showing massive gains, right? Massive earning gains, net income gains, and that's going to start reverberating across all companies.
Has to.
And
Yeah.
as the early adopters start to show wins, it will only accelerate adoption by others. And before you know it, this is going to go like parabolic, right? Where it will be like expected by analysts to see like a plan from CEOs and executive teams on what they're doing to implement AI, because they're going to be like, how is your, like our earnings per share forecast is not going to represent what your competitors are doing unless you have a plan and you're implementing and showing the cost savings and et cetera, et cetera, et cetera. So like, I think this, like companies like OpenAI, Anthropic, XAI, Gemini, et cetera, like you're going to see a massive revenue pop as companies all over the world start to figure out how to implement this properly to drive down cost and to drive revenue. And we're going to see huge earnings. I think huge earnings, and these companies, the winners in this kind of AI platform space, are going to drive a incredible amount of revenue, right? I think what's interesting to Nick's point though, is I'm really intrigued to see what's going to be the hook, right? That these AI platforms put into people where it's really hard to move from one provider to another, right? Because you're already starting to hear from businesses that they'll use one model for this particular task because they don't need, the Ferrari model. They just need like the Honda, the Toyota Camry model, and then they have other scenarios where they need the Ferrari model. So like people are really dialing in. It's all ROI, right? That's what I'm saying. So like once companies start to figure out what the ROI is for each particular use case and how to like really optimize that, that's going to be interesting. And then as models improve or get better or worse, et cetera, that's going to be interesting to see if they can hold on to that market share or if it's just going to constantly be competing, with each other on the switch. But
I am expecting we're gonna see data wars, right? So part of the reason I thought that Reddit had that pop that it did was because they kind of came out of the market as a free agent. It's like, all right, we got a big corpus of data just sitting right here. You want to read it?
Right.
Go for it. Like,
right.
Who wants this? And OpenAI has a nice advantage with a lot of different data sets, especially queued up through their pipeline. But if there are more and more exclusive agreements that are going to go to one data set or another, that will definitely be a deciding factor.
Right.
And then when you think of all the different data providers out there, if they might want to avoid it and then maybe take an in-house route, that will change things too. You're just going to need a lot of these. You're going to need quite a few answers.
That's right. Okay, cool. Let's shift to last topic. Okay, so X launched their TV app, right? And I like geek out on this, right? I have 3 kids. I watch a lot of television. I'm not gonna lie. Like the days of going out and partying in New York City for me are gone, right? So like I hang out with my wife and my children. We're at home. We're watching TV usually in the evening. So I'm a big consumer of this stuff. So I kind of geek out over it. That being said, we moved. So first question for you guys. I moved to all apps. I don't have cable anymore. You guys got cable or are you on the apps now only?
I don't have cable. I haven't had cable for years.
You got to be careful when you say, "Are you on the apps?" At least in New York, it's Are you on Tinder and Hinge and the dating apps? None of us is on the apps. But yeah, I don't have cable. No.
Okay, so you're like Netflix, Amazon Prime,
we've got
that kind of stuff. Right.
Yes.
Okay. So let me ask, do you guys use like YouTube TV or you like Hulu with the live? Like, how do you get the live TV stuff? What do you guys do for that?
Hulu and Roku's got live stations too. And I have all my
Okay.
TVs are Roku TVs, and
That's
then
what
I've
I
got
have, Roku.
Hulu. Yeah.
Okay. Got it. Nick, what do you use, man?
I mean, probably far too much YouTube by comparison to some of the others, but yeah, I don't even think we actually really have Netflix right now. We have Hulu, Apple, and Disney.
Okay. Got it. Okay. Do you have live TV though through one of those, or what do you
No,
do for that?
No, we don't have
Hulu's
live
got
anything.
live.
No, he's not live, man.
Yeah,
Nick's
Oh,
a no live TV guy. Wow.
we're not a big TV family, but we don't.
Okay.
Yeah, with nothing live
Yeah. You're
unless
an
it's on YouTube.
intellectual.
So
You're an
you
intellectual
now,
proper.
if it's on
Yeah.
YouTube, you can get quite a few things live, right? So
That is true.
yeah,
That's true. Yeah. Look, I use YouTube TV for live TV. And then I got to tell you, like the YouTube app on the TV, I'm like watching stuff all the time on there. It's crazy. I'm like super niche, like obviously doing what we do, right? I'm like super niche on like financial services stuff and the markets and whatever. Like, you know what I mean? It's like really dialed in. So my kids laugh at me because they're like, oh, dad's watching some interview again. You know what I mean? It's like that. So but that being said, so this is why I wanted to talk to you guys about this. So X launched their TV app. Okay. So X is now obviously a private company, Twitter, right? They launched their TV app. They've been like sucking wind on advertising revenue, which is a primary driver of their thing. I have people calling me all the time to buy X shares, like all the time on the weekly, right? It's the guy bought it at $44 billion. It's like down in like the teens now on valuation. Nobody's selling, right? That owns that stock. And if they are selling, I had one guy give me an offer, but it was like a 35 billion, right? I think Fidelity has it down in like the 12 to $15 billion range, right? That's a massive premium. So here's the thing. I do find it interesting that they're flipping this thing to video. I find it interesting they're doing the TV app. To me, it's becoming pretty clear like he wants to compete directly with YouTube, right? Now, YouTube is 10% of all TV viewership in 2024, 10%. So in America, if a person turns on the TV, 1 out of 10 times they're watching YouTube. That's nuts. Right? I think that's nuts,
that's
right?
nuts because if you count it as a single station, which obviously it's not, but
Yeah,
it's still all the revenue goes into the same spot, and then they do their
correct.
shares. So there are, I mean, I think there's ESPN 8, the Ocho, right? So there must be 8 ESPNs. You got 100
Right.
all these other
But
things. I
Nick,
mean, are
does
owned by
anyone
Disney, right?
compete? Like in your mind, you're doing the apps. I don't know what other word to use, but you're using streaming apps, okay? Not Tinder and everything. But like, is there anyone competing with YouTube?
Everybody is so far behind. So I mean, my my wife is in this space, right, and
Yeah,
tracking all the social analytics and things like that. So I will do a little shout out to her, but also here's some data from eMarketer to give you a sense of how big that gap is
yeah,
between YouTube and Twitter or X. So the source here is eMarketer. Hopefully we use that fairly. That's a
yeah.
combination of estimates, surveys, interviews, and company reports.
Right,
Because nobody's going to want to give out all their data. It's not going to be as easy as maybe what we got from OpenAI because they want to showcase that massive growth because this
right.
is all over the place. But Twitter has something like 52 million US active users. And only about 7% of those are actually off or away from mobile. So if you think about it, everybody is attracting so much video time. That's great. And there are a lot of short forms. And you can also compare that to like a TikTok. But YouTube, by comparison, 2/3 of that is on television. And they have about 242 or almost 5 times the number of users.
That's
After that would
nuts.
be Facebook, 178. That was million, 242 million. Facebook, 178. Instagram, 123. And then
But
TikTok, Pinterest,
nobody
Snapchat,
competes.
Reddit,
But Nick, like nobody's competing with them on television.
not even
Isn't that
close.
crazy? I
Not
find that
even close.
nuts.
Yeah. So I guess, yeah, Facebook would be remotely close, but it's not even half of that, right?
Yeah. So like this X TV app, right? I think is going to be really interesting for X valuation. That's why I brought it up, right? The other thing that's interesting too, and Clint, maybe I can get your opinion on this. So DirecTV, okay, Disney pulled their content from DirecTV. There was like a contract that was due to, and they like didn't sign a new one. That's ESPN. So like people that like college football season, pro football season just started, and there's no ESPN on DirecTV. Like, how many weeks are you going to let that go by before you're like, that's it, I'm done? You know what I mean? I'm going somewhere else. So like DirecTV, but here it is. Like DirecTV's, they had 25 million customers in 2015. They have 11 million now. They're down 56%, right? In the total, like, does Disney even need to do that? Like, it's just going away, right? So at some point, you don't do a deal. Like Disney just be like, I'll go direct to these people. I don't need you for this, right? And if they content starts coming off DirecTV, like that thing's done. They're done.
Right.
Like why have it, right? So like Clint, like what do you think? Is this like, are we kind of seeing the end of cable television? And like, what are your thoughts on kind of X and like this, like competing with YouTube? I mean, even to get a little bit of market share, that's like a real business, right?
Yeah, I think we're seeing decentralization, and I think that's cable is is a great way to think about centralization, and that's going away. Now the power is going to the individual brands who can command a community and maintain a community. ESPN, in my opinion, has had successful growth on their app.
Right.
I use their app a lot. Disney, maybe not what everybody expected, but successful growth on the app. I think these platforms are demonstrating that streaming is here. It's not going away.
Mm-hmm.
And I think XAI, X, in order to compete, they've gone out there and really invested in agreements and arrangements with entertaining acts or promotions. And I think that that's really central. They've also shown that they've done exclusives where it be like Elon Musk interviewing former President Trump.
Right.
That got a huge amount of views, like
right.
massive. So they're competing there. Tucker Carlson bypassing the $100 million check. Think again, decentralization, power of the individual. He passed down $100 million check to go to Valuetainment.
Yep.
Didn't even consider it. He just launched his own show on X. And I think you're going to see a lot more of that on X. And I think that's the attraction for X. And I think it's definitely going to lift the valuation of X from its current posture, which I think is low and cheap. I think that's a very inexpensive valuation. There's obviously issues with all these social media platforms. They tend to draw, the X tends to draw, some wild stuff, but it's become known as kind of the quote unquote free speech platform. Right. And I think it attracts a lot of people that's important to. And so it's built a very impressive community, and that community is going to generate significant opportunity from valuation or multiple expansion for that business.
So to that end, I think you have a good point, and I think it's probably the star power draw of X that could actually make this thing work versus Facebook did launch more of a TV styled or approach app for smart TVs, same as TikTok. Both were arguably failures, right? But a lot of their content creators are content creators that you wouldn't know. So love them or hate them, like a Tucker Carlson commands a massive draw,
Right.
And I think that's the appropriate direction for X to go if they're going to be able to pull it off. But if they're so far behind, you have to have that unique set of data or unique set of talent or unique set of people, right, that you won't put on other platforms. So if you have a Tucker Carlson that you could ingest via YouTube, or a Tucker Carlson you can ingest via X, you're probably going to go to YouTube. But if you don't even have that option over at YouTube, there you go. That I think is where it is. I'm going to hop on the other side of the coin and say this probably won't be a massive success. I think they're throwing a lot of darts at the board and seeing what's going to stick.
Sure, fair.
I'll call them darts. But this one, I think it's just a hard go. unless you're really going to just run a media company in a lot of senses.
No, you do have to have the content. Yeah, you do have to have you have to have differentiated content like that obviously.
Right.
Or like, why not just watch it on YouTube?
Correct. Like Mr.
You know what I mean?
Beast, he came
Yeah.
over to X, and that was like a massive success. Immediately, they had so many hits. But you now are a month in. Are you going to watch Mr. Beast on your phone at an angle, or are you going to throw it up on the TV?
Yeah.
So
I mean, the thing that I find so interesting about this, right, being like, I was born in like 1980, right? I'm 43 years old. Like this stuff didn't exist when I was a kid. You know what I mean? Now I show this stuff to my, like our podcast, this thing that we do, I put it up on YouTube, right? I put it up on X. Like I pull it up every once in a while as we're like flipping through on YouTube. And I'm like, hey guys, look at this. Look at these guys. And they're like, oh, and my youngest son, who's 6, he's like, oh, Dad, you're on TV. Right? Like,
yep.
I think to Clint's point, it's like decentralization. Like if there's no more cable TV, this is it. And now we have like, you go to that search bar, there's algorithms and everything else, like got it. But like for all intents and purposes, like you can drive people to your content in the same medium
right.
that everybody else is. Like I could never be on TV in 1995, right? Like that was it. Like you never got on, you could never do it. Now you can do it.
Bad. Yeah. You'd have to have gone out and been a little naughty. And
that's right.
TV,
yeah.
Right? So,
yeah. But I remember public access. You remember that, guys? Like when we were kids, like public
totally.
access TV, and like I had guys in my high school. They like go down to local public access. It was like horrible, picture and everything. Sounds really bad, but they were on TV, right? But only in that like little market. You know what I mean?
Right.
Like I just think it's so fascinating that like us three, Evan, whenever there are 4 of us, can be on a platform, a television platform. I don't know what that is. Maybe it's just because of what I grew up with, right? But that just blows my mind that we're effectively, quote, on TV.
Right.
Right.
And we're going to be on TV forever.
Right.
That we could be sourced. So I was listening to the Founders podcast, which I love, and a point was brought up about The Lion King. All right. So we were all born in 15 years before The Lion King, whatever it was. It was early 90s. That came out, and it was a box office smash. Everyone loved it. Everyone made a ton of money, and there were some that got paid on royalties, and some people that paid a flat fee for their voice and things like that. As it turned out, the viewership and all the monetization of a film like that wasn't until, let's say, the last 10 years. People bought the DVD, kind of, yes, but then once that goes to streaming platforms, it went outrageously beyond
through the roof,
the belief of what it ever could have gone. Let alone if you look at Bambi or Dumbo or any of the films that came before it, no one could have ever dreamed what those royalty streams would be.
Right.
So now it's back in Clint's world of like, this is the era of the producer. We can go any which way. And if you can monetize and figure out the royalty or the payment system and structure appropriately, you're going to command so much. And this is why you can turn down like I wouldn't turn it down, but you could turn down $100 million contract to have your content produced and put out into the world a certain way.
Right.
Because now it's just, you can be connected anywhere you need to be connected if you are valuable. And hopefully what we're saying is valuable, right?
And consumed in any different way, right? Because you were just saying something I thought was great, Nick. You're like, am I going to watch this on my phone or TV? I never watch the TV. I'm more prone to watch like a movie on a plane on my phone than I am to ever watch the TV. So I never watch the TV at all. I mean, hardly at all, unless my wife wants to get into a show or something. So when I think about the consumption of this day, these are the type of platforms that open up what we talked about, where you're going to have the billionaire teacher, right? Where these people who are, and we sort of have that. There are people out there who have made a niche in education around this particular topic, and they are making tons of money through online consumption and selling courses. I mean, that's really exploded. I think you're going to see that across the gamut. It's a really, really exciting time. And I'm just happy that there's platforms out there throwing darts, to Nick's point, to try to give us the opportunity to produce and share and unite individuals towards whatever common goal that is, no matter how minute. And so I'm excited.
Yeah, this is going to be a fun one to watch. I just, the reason I kind of brought this up, there's going to be investment opportunities here. I don't know if it's like for guys like me or us, right? It's probably more in, there's always going to be studios, Hollywood studios or other types of play studios that are going to be producing content. Like with AI, this might get a lot more simple. Like you may not need as much capital now to be able to do these things like you
Perfect
used to
examples
in the
like Ryan
past.
Reynolds. Think about all these people who went out and started their own production studios that were actors. I think the same thing. You're going to have really powerful actors and actresses that have invested in production that are going to go leaps and bounds above the competition. I
Right.
mean, who's the competition now in terms of production? Netflix? Like,
Yeah.
how are you going to get a new star launch? It's probably Netflix, right? It's a streaming
Yeah.
platform.
Yep.
Most of these, so I think it's a great environment for these talent. I think it's a great environment for talent.
Yeah. I think it's going to be awesome too. Cause not only just the people in front of the camera, but also I think, writers and graphic design, like all these folks, like if you're a good storyteller and have a good vision, right, you're going to be able to use AI and deliver something to the market at a fraction of the cost of what it used to be able to cost to deliver something of a similar quality in the past. Right. So like we're going to have an explosion of incredible content, which I think will be really niche. So like there'll be something for everybody, right? And because it will cost almost nothing. Well, it would cost something, but it costs very little to produce it, right? So you can get great content, great storytelling, and something that's like really specific and niche, which people will end up consuming. That kind of content. So yeah, like there's an investment opportunity
Ton.
in
Like
this, right? Somewhere.
highly recommend a book to you guys. It's Rick Rubin's book on essentially being a creative, but I forget the title of it. It's being creative, a way of being, or something like that. But incredible book. And in the and I'm not quite finished with it, but I think it was the first chapter, second chapter. The title is "We Are All Creators," and I love that whole thought process, especially in this era, because where has it been this simple to take
Yeah.
something from idea, creative spark, to manifest it to the world and producing it? It's such an amazing time to be alive and think.
It's awesome, man.
And AI is making that easy, to your point.
My wife comes in yesterday and I'm on YouTube looking how to publish an ebook on Amazon, which is free. Right. So like, think growing up, man, publish a book. Like, oh my gosh, how did you do that? Like, and now you can publish a book on Amazon and Apple, and it's everybody in the world can read it in the click of a button, right? Can read your book. So, I mean, it's just like these platforms are so incredible. I just find it so fascinating that it's like I'm seeing an acceleration or maybe a wholesale shift from like the way that it was when we were growing up to like the way that it's going to be in the future, and then my kids are not going to even know any different. So like if they want to make a movie, they'll just make a movie. You know what I mean? Use AI, make a movie, rip it out on YouTube or X or whatever other platform. If they want to write a book, they'll just write a book and publish it on Amazon. Like everyone's doing this. Like what's the big deal? Like very interesting. But this is when you see this kind of, I don't want to call it disruption, but shift,
Leap.
right? Yeah, it's like I think this stuff.
I like that. That's
it's going to start accelerating, and there's like a business in there, and and if YouTube and X are the two main platforms where people are delivering this stuff, video, kind of on television video content, that's an interesting investment opportunity, right?
I think we also have to think about the lack of stickiness in these businesses too. Right. If you are going into a period of like what Raoul Pal always calls the exponential age, the hat tipped Raoul there. But if you think about this exponential age and exponential expansion, these leaps, businesses are probably not going to stick around as long as they have been in the past, because you're going to fade it's going to be move fast and break stuff.
Yep.
And continue to expand and run. And I think so. That's one thing to think about. May not be true, but that's one thing that kind of keeps me up at night.
No, I think
how are you going to bet on that?
Aaron and I can relate and love that topic. It's like, all right, look at the S&P 500 from 20 years ago and 40 years ago. What's it look like, and how's that going to project into the future?
Yeah,
I completely agree with you.
The half-life of a company, putting my chemistry hat on, the half-life of a company is shrinking.
Yeah,
for sure.
It'll absolutely be appended, and you want to be on the right side of it. But then, Clint, hitting on one aspect that you're talking about of we're talking about everything between X, which I put at the bottom as well. When you compare it to even it's fewer users than Snapchat, and they tend to be older, fewer than TikTok, fewer than Facebook, fewer than Instagram, all that. And then you have YouTube at the top as king for monetization and many things, maybe pair and pair with Facebook. But there's got to be another one just waiting out there. Remember how fast TikTok grew? Like 5 years ago,
fair.
I didn't know what it was, right? And then it came out of the blue, or maybe it was 6 years ago, but came out of the blue and just took over everything. So as we get those generational shifts as well, we're having the alpha generation, or maybe the term that Clint called it, come out. There will be another one. There will be another 2 and another 5 after that.
Fair point.
So
fair point.
They will look profoundly different as technology changes. So
Look,
maybe
that might be the investment opportunity, right?
Right.
Identifying these new emerging platforms and capitalizing, from an investment. There's just something. There's something
let
here.
them be guinea pigs. Right? Have
Yeah,
kids,
man,
let them be guinea pigs. They'll tell you the answer.
We'll put our kids on next week's podcast and just be like, "Oh, what are you looking at?
What
right
do you
now?"
like?
Yeah, we're Americans, man. We love to consume content, right? And it's changing now. And as I think folks get older, the demographics kind of change a little bit. I think, younger people are going to only be doing this. I just think there's an interesting investment opportunity here within this ecosystem, which I think will be really compelling to think about, right? In time. But anyway, I think DirecTV is done. So short that stock, not investment advice.
Not investment advice.
Right. But okay, fellas. All right. This is awesome. Thank you guys.
We'll end it there. That's a good way to cap it. Nice job.
Yeah, man. Yeah, man.
See you guys.
Okay. Thanks, fellas. Cheers.
Bye.
Cheers.